Hello, everybody. This is Noah and John, and we are both from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market update. John, let's get right to it. I'm looking at supply 65.55. Show me that chart.
65.55 it is. No, that's about 4% lower than last week. And I'll be honest, I was surprised to see supply drop this week.
Yeah, I was too. There's a lot of stuff coming on the market, and contract activity is ticking up. It is ticking up from the lows a few weeks ago. But I am surprised too. I would not expect this to happen sustainably for the near term. I would expect supply to go higher, but let's keep an eye on it. Moving over to Manhattan, demand pending sales 4491. Johnny, show me that chart.
That's another decrease in our pending. That's down 1.5% or so from last week. And, it's kind of what we've seen since end of July, just a slow decrease in pending sales. We were thinking it may be plateauing. These numbers are not that big, Noah. So pending sales is holding steady, but it is the trend is down.
You know what? It's like a tanker when that pending sales moves, John. So even if you get a couple of weeks where we start ticking up, it takes a little while for that tanker to turn itself around. So it might still go down a little bit more before it starts to stabilize, but we'll keep an eye on it. And that's why this market pulse is so important, because it's taking into account both of these forces in one index for you. And as long as it's below 70, I mean, we were at 0.85 about 6-7 weeks ago. So now we're below 70. So again, buyers have this brief window of opportunity of leverage, I think, happening right now. And we'll watch that pulse to see which way it goes. And that'll tell us those two forces together, Johnny. Let's switch over to the weeklies and see what's going on in the weeklies. I'm looking at supply. 534 things came on the market. Show me that chart.
534, no, is exactly right. That's about 12% higher than last week. And, we've been talking for the last several weeks how weekly supply had been making a lower number every week. This is a change. So we've seen a big pop in the number of listings coming on the market, over 500. And I'll be honest, this is a very heavy listing season so far. If you compare it back to prior ones, and we've had a lot of stuff come on the market, and I was expecting another dip in weekly supply, or at least sort of a flat number, but this 12% is it's an interesting tick up.
Yeah. You hit the nail on the head right there. This is a heavy listing season, right? We're seeing a lot of stuff come on the market, and that's what's driving that pulse lower. Is that there's a lot more stuff coming on the market than there is going into contract. And you could see when you add up off markets and in contracts right here, we have more stuff coming on the market. So there's a net positive. So again, that's why we're scratching our heads when supply was going down. I still think supply is going to turn around, but we'll see what happens. Let's move on to contract signed, see what's going on there, Johnny. 276 deals signed in the last week. Show me that chart.
It's a few fewer than last week, about 2.5% fewer. Not that many. The weekly contract signed is kind of going sideways here. We're not quite above 300, but as we were talking about, it's being a very heavy listing season. The demand side on the weeklies, the contract signed, has also been pretty stiff. It's up there.
Yeah. And I just want to point out the 1 month, guys. This is what I'm looking at right here. When I look at the contract signed approaching 1,100, that was in the mid 900s, right? About a week and a half ago, whatever it was, 2 weeks ago. So it is starting to come up. That's what I'm wondering. Maybe that's why supply is going down a little bit, because it's incorporating all that kind of stuff. So we want to keep an eye on this contract signed number. This got to 1,800 in May, John. 1,800 in May, this 30-day pace. We have come way down since then. All right. So we could feel it that we've come down. How high do we go on this next season? That's going to be what we're looking for. Okay, Johnny, let's move on to the charts that we have outside here. We're going to do a rental edition today, Johnny, and we got 2 years of rental data here. And what we got is we got the median sales price, right? That's in these little green bars here, light green bars. And we got rental new listings, right? The new listings coming on the market. And we got the rentals signed leases, the signed leases on a monthly basis. And we put all that together. And, the first thing I want to say is just look at that nice recovery.
Yeah. I mean,
rental prices.
Median asking rent is back to 2019 levels, which is something you probably would not have been expecting a year ago.
Yeah. It's only a month. I mean, it's only a month, so this could go right back down a little bit, but I mean, it's still great to see the rental market coming back. And there is some seasonality here, Johnny. If I look at this area here and I look at this area here, it's kind of looking a little bit more like it used to.
It is no, but there's an important difference between what happened in the fall of 2019 versus right now, which is that, the lines have switched. In 2019, the number of signed leases was below the number of new listings. Here it's the opposite. So yes,
Yeah.
seasonality has returned, but it seems to be seasonality with a lower inventory, which suggests to me rather that this median price of 3,600 or whatever that is, it could stick around for a little while.
Yeah, it could go higher. Like the fundamentals are supporting a recovering sector. Very, very, very cool. Now let's break this down and let's show you monthly the year-over-year percentage change for leases signed. And we broke this down by all the different bed counts so you could see it. Obviously, this is the recovery period that's now being compared to the COVID lows. That's why it's so high. And it looks like we're just kind of going back down over here. Again, seasonal kind of levels.
Yeah, I mean, listen, you're comparing September 21 to September 2020. It's a tricky comparison to make, regardless.
Right.
But yeah, this is what you would normally expect. You would normally expect this slope since, I mean, look, the April, May, June numbers are off the charts, literally, because they're coming from nothing to something. But you would expect that slope coming down into September. You would expect to see that the rental rates kind of for the demand cooling off a little bit.
Okay, let's move on to the inventory. And again, this is probably why inventory has been going down. It's been pressured on a year-over-year basis for, what is that, 5 months now, John? Yeah. That's what I see over here.
Yeah, and I think that's what's probably supporting those higher prices that we've seen too.
Right. And finally, if we break this down by year-over-year percentage change, here is that rental price recovery that we talked about right over here. I wonder if it's going to be exhausting itself like the Manhattan sales cycle. I feel like the Manhattan sales cycle has had a great recovery. But as all great recoveries, they don't go on forever, and they pause and they take a little exhaustive rest. I wonder if the rental market's going to do the same, or we're just going to go power into the end of the year. What do you think?
Yeah, I would agree with you. I feel like we might be due for sort of a sideways moment here. If you look at September 2021, right, that's the first month that we've seen rental prices positive in terms of the year-over-year movement for all bed counts, right? The ones, the twos, and the studios. So I think we're at a point where you could say rental prices have recovered, and it's just a question of where they go from here. And I mean, if we're entering a repeat of seasonality, we're headed into the winter where typically not a lot happens on the rental market in terms of prices. I mean, that's usually not when you see giant price increases. So I think we're going to see some sideways movement here.
That's exactly what I'm thinking. That's exactly what I'm thinking. Thank you for putting it into words so elegantly. Thank you, John Walker, for pulling up this data. I am Noah Rosenblatt. We are both from UrbanDigs. Don't forget, if you got questions, we got answers. Just visit our forum right down here. Otherwise, this has been your Manhattan Weekly Market Update, and we'll catch you next time.